Welcome everyone to HFN. Today is December the 31st, 2019, the location to where we trade different, and as well, we are your trusted source of news according to the price chart. We're going to talk about the United States stock market and is it in a bubble? We've heard this numerous times ever since 2008 after we got out of that financial crisis that we will come through another one. And here we are concluding the decade. And seemingly, we're not in a recession. But many people, Peter Schiff, a lot of the other financial pundits continually tell us that this market that we're going through is going to be a recession. But nobody is giving us an exact timing of when it's going to occur. This is another individual. He goes by the name of Clem Chambers. And if you do a quick search on him, he is a chief executive officer from the United Kingdom, and he's writing articles about the United States stock market. And he is the CEO of HueFin, a global stocks, shares, and crypto information website and online blockchain, a company that develops blockchain technology products. He's a freelance journalist, so that's why Forbes placed his article on their website on December 27, 2019. Now, he has won a couple of awards from marketing journalism from the articles that he's written. But then the question is, do we need to pay attention to what he's saying or to what he has written? And he starts off this article talking about the S&P 500 and how it looks to have entered a bubble. My question to Clem would be, what gives you that definitive statement? What makes you say that? What makes you write that down in your article? At what point from a price point perspective on the price chart would you say, bam, there you are, we entered into a bubble? Because here we are from 2008 to 2019, 11 years in. How big is this bubble? Explain that. At what point did we enter the bubble? Explain that. That is the question that we need to have this gentleman answer. Because even in the next paragraph, he goes on to write that it's hard to judge the terminal of a bubble or the speed of it, because the higher it goes, the faster it goes, until the trend is parabolic. So what are you talking about, Clem? Your earlier statement just stated that the S&P 500 looks to have entered a bubble. But then you tell us that it's hard to judge. You don't have any credibility when you speak out of both sides of your mouth. Everyone who is considered a financial pundit in this space understands and would take credit for whenever this financial collapse happens once again. They had an 11-year head start to continually regurgitate the financial crash, the financial collapse, the depression, the recession, 2020 bubble. Now it's going to be 2021 if it doesn't occur in 2020. It is a revolving wheel that never ends until it actually occurs. So let me be the first one to congratulate each and every one of those financial pundits that has called the financial crisis of mass proportions. It has been going on for so long, for 11 years. That everyone has placed their hat in the ring, and they all will take credit whenever it occurs that they were the first ones to say we are going to enter into a financial bubble or a depression. So let me be the first one to congratulate each and every one of those financial pundits that you finally got it right. You had an 11-year head start on that. Clem goes on to write in this article that there are market cycles. You have a recovery, you have a move higher, you have a massive bubble, and then a collapse. and then it reverses. It does the same thing. It just continues to go back to the beginning, and it follows through the same cycle again. Okay. Now, he listed the price chart right here of the S&P 500 shows a bubble phase is underway. Explain this. At what point do you know this is a bubble? Because back in 2008, they considered this to be the bubble. And here we are, a massive move higher of seemingly no end. At what point did we enter the bubble is my question. Based off this price chart that he listed, it has just merely lines. And he's telling you that you don't have to be a market guru to see that the bubble phase is underway for the S&P 500. For all the bad news in the media, the market is on its way up almost vertically. Bad news. If the market was giving truly bad news, do you think it would move higher? He is perceiving that the news is bad. That is his perception. But the market is telling you what it perceives because the market continues to move higher. This is why you focus only on the price chart. He thinks that the news that is coming out into the media is bad. Obviously, the market feels differently. So he is contradicting his own self. The confusion lies at the marker between what the market is telling you based off the price chart versus what everyone else is saying. That's where the confusion comes in. Don't get it twisted. Nonetheless, this is what he writes. Trees don't grow to the sky. And when you see a chart like the NASDAQ, it's hard not to see the foothills of a bubble. Again, he is being very, I'm not going to say forceful, but he is really trying to pinpoint this to the reader that we're in a bubble. This is his plan. He likes to get out as it runs away in the final vertical. And you guys notice that he doesn't give you the final vertical. He doesn't tell you if we're actually in the final vertical right now. Others like to get out as it starts to crash. The key is to know in advance what you plan to do and what you are looking for in the market action or news flow to trigger your retreat. The news flow obviously is wrong because based off the news flow that he just wrote up here, for all the bad news, we should have been seeing the market move to the downside. If the market is negative and the news is negative, come on, Clem. You cannot say news flow to trigger your retreat then, because we should have been left the market if the news was actually negative. So the best way to do it is by looking at the price charts. So deciding this is the bubble part of the cycle is to prepare not only for the journey, but also for the destination. And he has no idea where we are at in the journey based on this article. And here we are. Again, every financial pundit does this. As we leave, or as we conclude 2019, and now they go into the next year and try to emphasize that it is going to be a big year. Back in 2018, they said the same thing for 2019, that 2019 was going to be a big year. And it was a massive year for the stock market to make all-time highs. So now, here we are. 2020 is going to be another big year. As always, we hear that continually in the market. Now, for us, you know, our focus is on the price chart. Okay. And we're going to give you what we're seeing into the market for the S&P 500 as well as the NASDAQ, since he has made reference to both of those indexes. So here you are. We did a video in the S&P 500 a while ago. I would say probably around October, beginning of November timeframe, with the expectation of this particular index to move lower. And you guys can tell that it really didn't play out that way. We even missed this particular forecast into the market in S&P 500. And we would have gotten out of this particular forecast right up around this particular area, because we've known that this particular index is still reflecting to us a lot of strength. Okay, so that would have been a loss for us right there around 2%. If it were still into the market now, we've been down by 4.39%. All right, so again, it went against us. It happens. So now what we're going to do, we're going to get rid of it, and we're going to talk about whether or not the S&P 500 is in a bubble. Because when I zoom out and you take a look at this weekly chart in the S&P 500, at what point have we entered a bubble? If anything, we've seen accumulation periods in the S&P 500 that is allowing this index to continue to see higher prices. Now, have we strayed away from an equilibrium to where the market can trade smoothly and move higher? Yes, we have. And simply the market is just anticipating the fall. That is the expectation that the market is getting and you're receiving in the news right now. Every day that we make all-time highs in S&P 500 and NASDAQ is another day that many people are going to join the group of, we are going to see a correction. We are going to enter a bear market. Understand that is what's going to happen as we're trading at these all-time highs in the S&P 500 as well as in the NASDAQ. Okay, so given situations like these, you just continually ride the market until you get a signal from language analysis that the market is about to move to the downside. And based off the monthly time frame, we're not getting that at all. The only thing that I would say is a cause of concern is the fact that there's no volume coming in for the whole month of December. So we are losing gas that allowed this market in the S&P 500 to move higher. So there are some hints of us pumping the brakes in this move to the upside in the S&P 500. And naturally, in that movement to the downside, right around 3,000 points, maybe 3,025 is where that first initial support area is going to be. Okay. But for the time being, you just have to continue to ride with the market. And we're not getting any indications of weakness. The concern that I am eyeing right now is the volume did not appear for 31 days. We have not seen light volume like this. Maybe until back here in January 2018. And the following month, we got that massive move to the downside. So I am definitely eyeing the market in the S&P 500 of seeing another move to the downside. It is way overdue. I mean, this is the third consecutive month of the S&P 500 moving higher. Okay. But we haven't gotten that true signal, that true indication that, yes, this is it. The market has reached this top for the moment. But I am maintaining that it is quickly approaching. But I'm not going to put in a price target or forecast on the S&P 500 just yet. When we see a change in tone occur in the market, we'll do it. But for the moment, the market is satisfied with where it's trading. Now we can play this market on the 4-hour time frame, and I think I might just do that because I see that 3230 is resistance, and we're definitely getting some indications of weakness in the market in the S&P 500. So that's what we're going to do. We'll play this on the 4-hour chart, small time frame. Okay, and you can tell that the area of support on the 4-hour chart is going to be around 3220. initially, but that's where we'll TP the market in the S&P 500 at 3220, and ultimately we'll let it go down to around 3180 overall in the S&P 500. So this is it for the S&P 500 real quick, and then we do a very quick video, not a video, but a very quick look at the NASDAQ real quick. Okay. So now here we are looking at the NASDAQ. Again, the last time we did our video on the NASDAQ was around July 8th, 2019, with expectations of it moving lower, and you guys can tell it did. So let's just go ahead and get rid of that. We do have that in our playlist, so just go ahead and check that out back in the July time frame for the NASDAQ. So let's get rid of that, profitable there. Okay, so daily time frame in the NASDAQ, you guys can tell that again the volume is completely dry. We're not seeing a lot of participation of the market as we're trading and seemingly looking higher in price. That's the concern that I'm seeing into the market, that the overall market is drying up. It is losing that emphasis of higher prices. The 4-hour chart in the NASDAQ as well is giving us some indications of weakness and its inability to break above 87.34. That's a problem. Okay, now we have already came and held support momentarily around 86.80, but the market overall is running out of gas. So we could play this market in the NASDAQ as well to continue to see those lower prices on an hourly time frame. We're not playing this on the weekly, monthly time frame just yet, but we are seeing some minor hints that this particular index as well is giving us some weakness. So we're going to play this market in the NASDAQ of moving to the downside. Now obviously we're going to play this area right here for resistance, because the market has failed numerous 4-hour bars to see lower prices. To see higher prices. Now considering that we have already touched this 86.80 point level, we will TP the market right there again, which is around 0.31% profit into the market, under the presumption that we see weakness coming into the market. Okay. So we're going to play the NASDAQ as well, moving to the downside on the 4-hour chart, just like we are in the S&P 500. Okay. Weakness is definitely being seen on the NASDAQ though over the last couple of days, indicating that the market is getting tired, and we follow what the market is telling us, and it's telling us that momentarily, at least on the hourly time frame, we should be able to see some movement to the downside. So this is it. Questions, comments, let us know. Make sure you always maintain your profitability, and join us by subscribing to this channel, liking the video, sharing the video, follow us on Twitter, Facebook, Instagram, and then on our website at HueFinancial.com.